You'll have heard a lot of news about the changes to mortgage lending at the moment, and basically that's the triple CFA. There's been big changes came in on the 1st of December that's really impacting on lending, and especially if you want a mortgage to buy a house. So I've got a man here that knows all about it, one of the leading mortgage brokers in Dunedin. Good morning, Nick Van Der Heyde, and thanks for your time.
No worries, pleasure to be here, Mark. It's been an interesting roller coaster. Probably let's cap it for the last couple of years. We've had a lot of government stimulus in the market around COVID, and COVID's been a really topical point of what's happened here. We had a lot of government stimulus to aid the market, and what we're now seeing as repercussions of that is some really high inflation figures in the marketplace. So what we're now facing is an issue of inflation. The Reserve Bank of New Zealand are obviously trying to combat that with official cash rate increases expected this year, but we've also got an underlying issue from the government around looking at credit and the availability of credit, but also bad credit being offered in the marketplace. So this is where we're looking at now this triple CFA legislation and how we're going to use that to combat some of this issue in the marketplace. What I'm seeing from a mortgage perspective at the moment is it's unfortunately working in a very detrimental way for customers. We're seeing a lot of applications these days, or in the last, say, 3 months, that are being declined, whereas previously in the last couple of years we wouldn't have issue. They are diving into, or the banks are now having to dive into, because of this legislation, further into clients' expenditure. And that's resulting in some really tough assessments because unfortunately clients are spending their day-to-day money as they please, but not necessarily understanding how that might now detriment their mortgage application.
Right, so we're reading a lot of scenarios about this, and really the banks have different powers, if you like, now, don't they? But they're also being asked to look more diligently at people's expenditure. So we're hearing cases of people, buying, simply the banks are saying you're buying too many takeaways or you're visiting Kmart too often.
Yes.
It's really changed the landscape for wanting to get a mortgage at the moment.
It has. In the past, how a bank would assess a mortgage application is they would means test it via a higher interest rate. So we would means test a mortgage applicant at, say, 6.5% or 7% interest. And then we would generally have a standardised budget of expenses for a household, plus or minus regular expenses that are going out for a client. Now what we're having to do under the triple CFA legislation is every regular expense that is running through a person's bank account over a 3-month period is taken as gospel. So those clients, particularly over the Christmas period, who have been in, unfortunately it's a higher expense period for most households.
Yeah, in holiday mode.
Correct, exactly.
Lots of takeaways.
Exactly. So what we're now finding is not only we still means testing those applicants at a high interest rate, but we're now also diving into every last bit of expenditure, and when we accumulate both the higher interest rate for assessment plus their true spending for the last 3 months, it's causing a real credit crunch for those applicants trying to get finance.
Okay, so make no mistake, this media that you're reading is quite true. It is happening. What's the best advice, Nick, you could give to somebody that's looking at either refinancing or getting a mortgage or maybe even a first home buyer? What's the best advice you could give to them before they go to get this mortgage?
Yeah, I think the importance at the moment is we do know that the triple CFA legislation is going to involve the banks scrutinising expenditure. So first piece of advice is any disposable income that you are planning to put towards that property is showing really good demonstration through your bank history at the moment. So pumping your savings account, keeping those one-off expenditures to a minimum. If you're looking to save for a house, let's try and keep one-off large retail expenditure to a minimum to try and curb the effects of the banks trawling through these bank statements. Another point for assessment at the moment would be using a professional that can help mitigate your application. That's a really important part that we're finding at the moment. We're hearing a lot of horror stories of clients being declined direct, whether as if hopefully I can intervene on the situation, I can at least put a submission forward to explain the Christmas expenditure, explain that filling up the boat 5 times over Christmas was a one-off, trying to put the applicant in best light to gain approval.
Indeed, I was coming to that point. Now more than ever, don't try and do it yourself. Use a professional, a mortgage broker, and there's plenty of them in the town, but if you don't have one, Affinity mortgages are very good, and one of the leading brokers in Dunedin. Any other advice you'd have, like how could customers prepare before they come to a broker or go to the bank? What you've said about their saving and expenditure, but what sort of information do they have ready to bring with them?
Absolutely. So what the banks are wanting to see more so than ever now is a real detailed scope of all your expenses. So we need to obtain 3 months worth of bank statements. That's really the crux of this triple CFA legislation and how they're assessing. So trying to look at your purchasing power and your purchasing time frame, knowing that you've got a 3-month window, prepare for that. But my advice would be try and refine your bank statements as best as possible. So try and keep them as clean from unnecessary expenditure as possible. Look, things like regular overtime, or just making sure that you've got regular pay slips available. That's a really good strength through your application. The banks like security and employment, and then it's just your standard, your statement position. Trying to clear up any outside debt if you've got it sitting there.
Have that credit card to a minimum.
Yeah, probably the biggest piece of advice would be, and I know it's very, very easy to do, but the likes of the OxyPays and Afterpay facilities. They are very, very good facilities for being able to pay things off over a couple of weeks or a couple of fortnights. Unfortunately, they require a high amount of disposable income commitment to pay those things off. So if the bank sees that on a regular basis, we're all of a sudden under triple CFA going to have to include that. So trying to keep those high purchase facilities to a minimum is a great
That's
strength.
a really good point. I think the other important thing to note too, the change that's happened with this is a good high deposit isn't all you need now. That's not going to get you over the line, whereas before the 1st of December, that was a really good part of the recipe, wasn't it? And it almost ensured you would get through, subject to your spending.
Absolutely. The assessment criteria has changed significantly, and I've been doing this a long time now, whereas if we had deposit previously, it was pretty much a shoo-in because the risk to the bank was minimised. Under this new legislation, and probably more the responsible lending code, we're now needing to assess multiple tiers of an application, and it's more coming down to character. So character is displayed through how you're performing through your accounts. So if you're defaulting on payments, if you're missing payments, if you're you're conducting expenditure outside your means, then that's now becoming a large part of the application. So yes, deposit in the past, deposit's still great now, but now it's character. So understanding, is this person demonstrating the ability to afford a loan?
I hope that's been a help. That's in a nutshell what's going on. But the best advice out of that is seek a mortgage broker to help you. Nick's always available on the phone, or talk to your real estate agent. Call Penny or I anytime. We can certainly help and give you advice.